Welcome back to Behind the Well Show. I'm your host, Roger Abel, here with Elias, Randel. How are you doing today, Elias?
I'm awesome.
Good,
Yep.
good. Funny, we tried to do this show the other day, and we both had complete mind freeze, so we pushed this off a day.
Yep.
But
we're here now, and I'm happy to be back.
But it's funny because this show, we're going to talk about the new documentary, Borrowed Future, and about 4 hours after I watched this, yesterday afternoon, a friend / client of mine called and said, hey, he had a question on 529 plans. And we just started talking about this, and I told him, I said, this is probably something you should watch with your daughter. I think his daughter's like 14 years old. And I just said, hey, have you guys had that conversation? Like, what are your plans? And he goes, yeah, I think she wants to be it was a dentist or something. And I said, that's great. You should watch this with your daughter now, kind of laying the groundwork. And I kind of had not this epiphany moment, but just a little bit of planning can go a long way so your family doesn't fall into the same problem that 45 million U.S. borrowers have in the U.S., and that's with student loans.
Yeah, and what really, to go along with that, one thing that really stuck out for me, and this would be a good, if you have a student in your house who's 14 or 15 right now, I think a lot of people don't know, and I certainly didn't know this when I was high school age, but there's a lot of scholarship money out there that goes unused. And I don't remember the exact figure, but there was a book talked about in the documentary. So if you
500 million or 500,000, this gal in the documentary found in scholarships and utilized to get her through college.
Yeah, and she wrote a book. It was like Confessions of a Scholarship Winner. So I would say anyone listening, if you have a high school age student, that's probably a good starting place to start getting some of this figured out, is maybe get her book and read it, because she awarded herself $500,000 to go to school. So and she kind of, some of the points she made, don't overlook the $500 and the $1,000 scholarships that are out there. She applied. She said she applied for a lot of those, and a lot of those you end up getting. Well, if you get $20,000 scholarships, I mean, it's a lot of work to do all those applications and stuff, right? But that's $20,000 right there.
So that's actually what a good part of our conversation revolved around, in the fact that it is a lot of work. And they interviewed several people, and they asked why they didn't do scholarships. Well, let's think about what really happens. You have a student, they get to their senior year, and now they have to start figuring out how to get scholarships and what's available. And most people wait until the last minute to do this. It's just human nature to procrastinate because it's unknown, it's unfamiliar, and you just don't want to deal with it. My conversation with my friend was, hey, look, if you put in a little bit of effort over a long period of time, it's very similar to the compounding of money, but it's just the compounding of efforts. I said, if you wait to do this until your senior year, it won't get done. But if you start in a year or 2 years, just a little bit of time every day, 10, 15 minutes, not waiting until the last minute, then we have to spend 15, 20, 25 hours doing scholarships and essays and figuring out where they're at. Man, that compounding effect of time and energy can help somebody stay out of financial ruin, and that's not talked about. And I started thinking about it. It's really no different than having a really good financial plan. What's your college scholarship, your college payment plan? Right? I mean, for families, we talk about having a 529 plan, so we have a way to help pay for college. But there's so much more that could go into this from a family dynamic of how do we actually plan to not start our kids out with debt. So one of the key phrases I thought about in this was, in today's society, schools really become like the barrier to entry. Right? To open any doors, it's thought that you have to have a college degree. And if you don't, then you won't have a good job. And that's what's really become today. And unfortunately, the first thing we do to most high school kids is say, hey, here's a piece of paper, sign it. And if you don't, you won't get a good job.
Yeah. Well, and that's the colleges and even the high schools have become, they're very good at selling this dream, and the reality is college is a good solution for a lot of people. College to me isn't the the end all be all solution of a career. There's other paths you can take. You can do a trade apprenticeship through unions. There's technical schools that you can go to learn how to have just specific skills. There's community colleges where you can get 2 years out of the way and working towards a degree. Yeah, but just kind of the idea that borrow money because this is your barrier to entry into having a successful career. That's kind of an idea that we kind of need to move away from that. And then, I guess families in general, and Dave Ramsey was on this documentary, and he's talking about being intentional, and that's something you hear a guy like Dave Ramsey say all the time. Put some effort and thought into it and be intentional about it. And I'll just admit when it came time for me to go to school, I filled out the paper that like, here's all the stuff you need to do. You need to fill this out, turn it in. And I wasn't intentional about it. I knew where I wanted to go to school. I kind of knew what I wanted to study, and I just signed up for the loans because that was the thing you did.
Yeah, those are some good points. In the documentary, there's a gentleman named Mike Rowe, and I don't know if anybody knows who this is, but just go Google him. But he has a show on it's Discovery or History called Dirty Jobs. And he goes and follows people around that do dirty jobs, like the stuff that people don't think would pay well. It's the jobs that people look at if you don't get a college degree as the alternative. And he had a really good saying in this. He said, instead of thinking about what you want to do, figure out how you want to work. Do you want to work with your hands? Do you want to sit? Think about how you want to work. And if you start to do that, you'll be happy. Like you said, maybe you want to work with your hands and you want to be a plumber, and people don't think plumbers do well. They make like $100,000 a year.
Yeah, you can make a lot of money as a plumber.
So I think it was really eye-opening, and what it focused on is the amount of debt that the student loan industry has out there. The private student loan industry over the last 10 years has grown by 70%. It's a $1.8 trillion industry. The average student loan debt is $37,691. But here's what I want people to think about. That's the average. So that takes all the people that have $3,000 or $4,000 or $5,000 and blends it with the people that have $200,000 or $300,000.
Mm-hmm. Well, there was a
orthodontist.
Yeah, the orthodontist on that documentary had over $1 million of debt.
There's
when he graduated.
101 people in America that have over $1 million of student loan debt. And we look at an orthodontist and say, hey, he's rich. I mean, if you said, hey, you're an orthodontist, you have your own business, you're rich.
That's the assumption.
That's the assumption.
Right.
In the video, he actually breaks down and starts to cry. And he goes, I don't know how I will ever make enough money to pay this off. So far, they've paid off $400,000. They have $600,000 to go. They gave a little updated at the end on people. But our kids aren't thinking about what the repercussions are of what they're doing. So a couple of things that we should be looking at is, hey, if we know we want to be a teacher, does that require us to go to Harvard or private school? You could go get, like you said, get a 2-year degree, get all your prerequisites done, and then go to the school that's a good teaching school in state. Too many kids have bought into this idea that college is about the experience. And it is. But is it worth a $200,000 experience?
No.
Think about what could you do with $200,000 and what experiences could you get over your lifetime for $200,000? And I promise you, it's more than 4 years of college.
Yeah.
And there's so many ways that kids can work themselves through college and not have debt. I mean, when I went, my dad told me, hey, here's a pot of money. We're paying your tuition. Everything else is on you. Well, he taught at Kirkwood. Well, I went to the community college because I wanted to go for free. So I got out of my first 2 years with no debt. I worked 40 hours a week while I was in school. I went to Iowa for 2 years. I came out with like $10,000 in loans because my senior year I wanted to get done. I didn't want to have to work, so I borrowed enough money to live and do all those things. But that's a reasonable amount of debt versus what I make. But had I financed and had the college experience, I would have had $50,000 or $60,000 of debt coming out of college.
Oh, I'm sure there's plenty of people listening that are thinking $10,000. I'd love to finish college
I feel
with
fortunate.
$10,000 in debt. Yeah,
I feel way fortunate that's all I
should.
had. But part of it's because of the decision I made. I lived at home. I mean, I lived at home my first 2 years of college. No college kid wants to live at home, but I did it because
No, not really.
I didn't want to spend the money.
Right.
I didn't want the loans. In fact, a funny story. So I have family that has deep roots to Luther College. You know what Luther College is. And I was dead set on going to Luther College. Like, that's where I was going. So I was going to go there, play football for fun. That's it. Just wanted to go play fun. I went there and sat through like a day of classes and hung out with the football players and all the fun things, and the next morning they take you and start talking about like the financial aid package and all that stuff. And they're like, well, this is the number. And it was like $44,000 a year. They $44,000. I said, is that for all 4 years? They're like, no, that's per year.
Whoa.
So on the way home, I made a decision really quickly that I was not going there, even though that's where I wanted to go. I mean, that's where I wanted to go to school. I just wasn't going to do it because I didn't see the value or the benefit of spending that amount of money, especially when I wasn't going for a specialized degree. I mean, I knew what I was going to do from the time I was in high school. I knew I was going into the financial world at some level. And was I going to get there faster? Probably not. And there's arguments for who, I had this conversation with my wife and said, well, yeah, but if you go to Harvard, you meet people and you get connections and maybe you get a better job. And I said, the key word there is maybe.
Yeah, maybe. And yes, that can happen. But is that like statistically I know I went to school with people that through connections through the college we went with ended up with good jobs and stuff. So there's a percentage of people that happens for, but it's not 75, 80, 90%. It's a much smaller 5-10% of people are able to leverage those type of good connections to get started in a good career.
And for most people, the idea of college, the reason they're going there is to have the American dream, right? I'm going to college to get a good job. That's why they go there, for real.
Yeah,
I'm going to college to get a good job. Unfortunately, when they graduate, all of their paycheck goes to their student loans.
Yeah,
that's what it's going to.
Yeah, and that's the painful part.
Some of it is the student loan industry has pushed these loans. They're a profit center. Sallie Mae's a profit center. They want to sell loans. The other problem is we've sold, or the colleges have sold this experience to people. And I know individuals who've borrowed money to go on J terms and all these different traveling abroad. And that's great, but you borrowed money to do it. You borrowed money to go on vacation. But the school will make you feel like, well, no, you were enrolled in school. This was academic experience. No, it was a vacation. So I feel bad for some of these people, but some people just made a really, really bad decision. Right. Or, Dave Ramsey has a different
That's a little harsh, don't you think?
It's what it is. You borrow money to go on vacation. But in other news, we talked about the Auto IRA provision 1 or 2 episodes ago about how there's a bill to make employers automatically roll employees in a simple IRA or an IRA at time of employment. And I always think this is hilarious, and we've talked about it before, but the American Securities Association has come out and said that violates securities law. So the people making the laws made a law that would violate the law.
Well, and they don't understand. Yeah, it's like, so they don't even understand how the current laws impact the decision they're trying to make now, which I think goes to the point you made in that episode that we have politicians making laws around the financial services business, and they don't really have the knowledge and experience to probably make those good decisions.
So here's what happened. They passed legislation called Know Your Customer, which requires advisors, investment advisors, brokers to get to know their customer as much as possible. You need to know their financial background, their net worth, liquid net worth, risk tolerance, just as much information as you can to make a good recommendation for somebody. In all non-ERISA retirement plans. So a 401k falls under ERISA, which is a different governing body. But because of this, the employer is not responsible to find out all those things about the employee. So it violates the Know Your Customer law. So it goes back to my analogy. The people making these laws, it's not dissimilar to me making laws about structural engineering, which I have no background in structural engineering. If I made a law about structural engineering, I promise you, it's not going to be good for their community because I don't know anything about it.
You could Google something about it.
I would Google it. That would be my knowledge base.
Right.
But I thought that was, I just saw it and I laughed because I just, they don't even put enough effort into figuring out what the current law is to make sure what they're proposing will actually work. And once again, I don't believe that the auto enrollment for employees in an IRA is a bad thing. I think it's probably a good thing. But they just have to make sure they're doing it in concert with what they've already passed as law previously.
I guess so they can't put that onus on the employers to know your customer. I suppose they could have if you open the IRA through a financial professional, like small businesses could hire someone to help the employees do it, then does that cover that? Or
maybe, but then why not just have it adopted under ERISA, which follows the fiduciary rules? And what I think is going to happen is it's going to go more to maybe we require employers to have some type of a ERISA retirement plan, also known as 401k, right? The problem is that could be very costly for employers to implement, and it could actually cause some changes in our industry and maybe some disruption in price pressure or pricing pressure on 401k administrators and providers. I don't know, but it doesn't seem as if it's probably going to work making people auto-enroll into a Roth IRA.
Yeah, I suppose.
Or a traditional IRA or a simple IRA.
Right.
So, Elias, one of the hot topics of 2020 and 2021 has been cryptocurrency, and it's back in the news. And as of this morning's filming, the first Bitcoin futures ETF debuted on the New York Stock Exchange. Started trading today.
Perfect.
And I'm looking at the screen right here 38 minutes ago. The Bitcoin's future ETF rises 3% in trading debut. So this is really the really first easy access the retail consumer has had to a cryptocurrency. And I want what I think people should realize is this is a futures contract. It's not backed by physical Bitcoin. If Bitcoin's physical, digital Bitcoin.
It's physical.
It's physical in nature.
It's physical in the matrix.
Yes, if you take the red pill or the purple pill, I don't remember what color the pills were, but if that's the pill you take, then maybe it's a physical object.
Yeah.
But I think it's interesting because we're seeing cryptocurrency become much more mainstream. We're having even older clients talk about it on a pretty regular basis. And I think it's kind of cool that we finally brought this mainstream for individuals if it's something they're interested in. And as we tell people, we caution you because this is highly speculative. The markets are very, very volatile. In fact, 2 months ago, Bitcoin was trading about 30,000. Yesterday it was 62. So you're talking about a massive rise, but you could see a massive fall as well. So it's a highly, volatile market, but there is access now for retail investors who don't want to go to set up an account on a Coinbase or some other market and have a wallet and all the other things that have been involved with owning cryptocurrency.
Okay, and so the ETF that came out, so those are futures contracts. So you're either saying you believe the price is going up or the price is going down.
Correct.
And you can just but when you buy it, you're not just tracking the price of Bitcoin?
Well, it closely tracks the price, but it won't exactly track the spot price of Bitcoin because it's not backed by digital Bitcoin. Meaning they're not having to buy Bitcoin as investors pour money into this. There's been a futures contract traded for a while, but this is now the ETF that's going to follow that price.
Yeah. So then is it okay? Because I feel like I am personally, I'm probably bullish on like crypto and the technology and stuff, but I'm still not a buyer of it. I don't own any. I don't plan on buying it because it's too speculative of an asset. Is that like as an investor, is that an okay posture to have to say, yeah, I think that's going to be something and I do think it's going to work out, but I'm still not a buyer? It's
no dissimilar than what Jamie Dimon came out and said a few weeks ago. I won't ever own Bitcoin because I don't really explain Bitcoin or I don't really understand Bitcoin. And we talk about that with people a lot. If you don't really understand what you have and why you're doing it, does it make sense for you to own it? Some people believe they understand it, they can explain it. And if they want to own it, sure, you should. But if you don't understand, it's a good posture to take. Just, okay, I don't own it. I might miss out. But the question becomes, how much are you missing out on? And here's what
no one knows.
Unknown.
No one's going to know that part.
Right.
I mean, you know what you've missed out on up to now.
But let me ask you a question. And this is what I want people to think about. If you have a well-written, executed financial plan and you're 40 years old, you're working with a financial advisor, you've quantified where you are today, where you want to go in the future, and your probability of success is 95%, does it matter if you own Bitcoin and it goes through the roof?
It shouldn't matter.
It doesn't matter. It doesn't matter at all.
The only place it matters is like your greed. If you're so greedy, you need to have crazy returns. That'd be the only place it would matter.
The only place that matters is at the neighborhood barbecue and your buddy's telling you about how he bought Bitcoin, and then you feel bad about it. That's it. Right? Because the converse is true too.
Yeah.
It may not work out. So if you're want to dabble in Bitcoin, what's the recommendation we've given people from day one? It's not a steadfast recommendation, but execute a financial plan. Do everything you have to do to be on track for retirement. And then if you have additional capital, money, gambling or speculative fund, that's what you utilize it for. But you don't take your core retirement, your core investment dollars and start plugging it all into this stuff. Even though, hey, it's exciting, it should only be your gambling money. And it's probably, for most people, a very, very, very small sliver of their portfolio that would even be in something like a Bitcoin ETF.
Well, you would hope, yeah.
You would hope, but that's not human nature.
Right. So the fear of missing out, the FOMO, probably not the best reason to dump money into an asset.
People that are highly successful at investing have eliminated human emotion. And that's why having a financial plan is great. It removes all the human emotion, all the unknowns that we don't know. The people I typically see gravitating towards things of this nature are people that are behind, and they're looking for the lottery ticket to catch them up.
So, Roger, you talking about like that situation there, people looking for the lottery ticket, maybe they're behind a little bit and they think they need to hit a home run to kind of catch up. It kind of segues into an article that Molly shared with us about the IPO boom that's been going on in the U.S. And actually, as I was reading it, I thought, this is interesting because there's all these, now we're having records of initial public offerings and there's money chasing it and going into that. And I started to think, is this kind of a behavior where people, they think they need to go look somewhere else for returns other than just having a good quality diversified portfolio? Well,
so the IPO market, let's back up and tell people what an IPO is. It's the first time a company's been offered to the public. So I think Facebook had their IPO, I don't know how many years ago, but it's the first time the stock is offered on the public markets. It doesn't mean that people haven't already invested in it. And the IPO does a couple of things for the company. It provides liquidity for the people who have owned it from the beginning. They're now able to sell shares. But two, it also raises capital for the company for expansion. Typically, people aren't going to issue stock unless they want to grow the company. We've had 2,000 IPOs as of September for a combined $421 billion. And part of the reason I think people are drawn to the IPO, a lot of it are the new companies they've been using, and now it's exciting to buy, and they think they're going to do well, right? Also, people have heard of individuals making lots of money on an IPO. Well, most of the people who've made the money on the IPO are the original investors who then can sell shares after the stock IPOs, and individuals on the market can go buy it. That's where the money's made. It's not necessarily from the person who buys it at the IPO price. In fact, we have a little statistic here. Shares of U.S. companies that went public in the last 4 weeks have gone up 25% on average, compared to a 42% rise in value for those that went public this time about 4 months ago. The problem is some of that is just because the market happened to go up during that period of time. Okay. And the market has had some volatility, which has actually caused several IPOs to be pulled back and say, hey, we're not going to list. In the last 3 weeks, iFit Health and Fitness, which is the owner of Nordic Track, Alluve Systems, an alternative investment technology solution, and a couple of biopharma or biotechnology firms all pulled their IPO blaming market volatility because there's an unknown or less solid price that they think they're going to get. So the IPO market is speculative in nature, but it's popular because a lot of times it's the brands you've never been able to own before. So people like to jump on. I remember, was it Beyond Meat a couple of years ago listed? It went through the roof and then the price came back. So just because you buy an IPO or stock that IPO doesn't mean you're going to make money. I mean, I think Coinbase IPO'd, was it this past spring or summer? And the price went down pretty sharply right away. It all depends on what the price set by the syndicate and the underwriters are, whether you're going to be able to make money early on in that stock or not. So one of the other articles I sent out for the show, Elias, was about a bill to change Social Security COLA, expanded payroll tax. It's coming basically in one day. They're planning on submitting this bill. But what it's doing is it wants to combine the Old Age and Survivors Trust with the Disability Trust into one entity. They want to adopt a COLA that matches the Consumer Price Index, so it more accurately tracks what's really happening with the cost of goods. And they also want to apply a payroll tax to wages above $400,000. And I've talked about this for a while, and this is how I think they'll probably try to solve the fact that the Old Age and Survivors Insurance Trust, to try to push it out farther, is to raise revenues. So what this means, if you think about the average person, after you hit $142,000 of income, you no longer contribute to Social Security. It shuts off. What they want to do now is turn it back on once somebody hits $400,000 of income.
Okay, so there's going to be an income where you're not paying, and then it's once you go over $400,000, now you're paying back into the Social Security.
It's a gap. Right now, everybody pays up to $142,000, then you don't pay anymore at all. Now they want to turn it back on once you hit $400,000. So there's, a $250,000 gap of income that's not subject to the Social Security payroll tax, but they want to turn that on at $400,000 now. But one of the things I think is interesting, because we're hearing about inflation a lot. I mean, that's been a hot topic the last few months. This year, Social Security is getting a 5.9% increase, which is huge. You think about somebody who gets a $2,000 a month benefit, it's going up $120. That's a big amount for most people. It's a $2,000 a year raise.
So this year, what'd you say it was? 5.9% is the COLA. So why is it so high this year?
Well, we've seen increase in energy, food, cost of goods. Inflation's running around 5.9%. Look at when you go to the grocery store. I used to go to the grocery store for a family of four for like $200. It's $300 every week now. I mean, there's just no way I get out of the store for less than $275 or $300.
Right.
To the gas pump. Yeah. Gas is twice as much.
Yeah. And so seniors that are on Social Security, if that income just stays fixed, and they're effectively, if it doesn't ever go up, they're just taking a pay decrease every year because of inflation. So there needs to be something that helps them keep up with.
They've always got
that
raises.
Reliable income.
They've always got raises, but it's never been tied to the CPI, the Consumer Price Index. So it's going to more accurately track that. But it brings up the bigger question, and the question people are asking, that's about inflation. And we've seen, and every single person out there will attest, that things are way more expensive than they've ever been. I mean, I'm paying like $15 for apples. All the stuff that's healthy is way more expensive. Gas is double. Health insurance, I just got my health insurance increase. It went up 10%. Everything is just going up from a cost standpoint, and some of that is because of the supply chain disruptions. I ordered a bike back in May. It was supposed to ship in September. It's sitting on a crate in Long Beach at the dock waiting to go through customs, and they don't know how long it could be. They said it could be 6 months.
For your bicycle?
For my bicycle.
I thought you had it already. I thought it showed up.
I thought it was supposed to. No, it hasn't shown up.
Huh.
I sent them an email the other day. They're like, yep, it's on the dock. It's in Long Beach waiting to go through customs. I go, how long? Could be 6 months. So that's part of the reason that we're seeing the cost of things rise. I was in Target last week grocery shopping. They didn't have any spices on the aisle.
No spices?
I looked at the spice aisle. There's nothing there. Like just simple things we take for granted. Ponzu. Do you know what ponzu sauce is?
No, I don't.
You can't find ponzu sauce anymore. It's like this citrus Asian sauce. They don't have it at Hy-Vee, Target. I can't find it anywhere. So that's causing inflation to really, really rise. And it's things investors are concerned about, because as inflation goes up, we have to change interest rate policy, potentially raise interest rates, which would cause bond prices to fall. So there's different things investors need to really be cautious with if we get some inflation, and figure out, hey, what part of my portfolio could be affected by inflation? How do I combat that? Because there's certain asset classes that will do better if we get inflation higher than expected. And there's certain asset classes that will do significantly worse if we get inflation. So you should be having that conversation with your financial advisor as to, what asset classes does it make sense to be in if we get inflation.
Yeah. So did you read and see that it was from LPL Research that it had it talked about renewed inflation expectation. So basically what they're getting at, so consumers do expect to see more inflation, and we've talked about, and I guess I still think like when these supply chain issues get solved, I think that's going to help resolve some of it. And I think there's other things that'll keep inflation in check. Like consumers have the ability to shop online now, so we have like instant access to prices. But one thing I was reading in this research report from LPL, and this is an opinion of mine, but so I guess consumers do believe that housing prices will start to come down. And I actually had a conversation with a friend the other day who was saying the same thing, because he's shopping for a house, and he's saying, well, I'm going to wait till prices come down. And I feel like there's a little bit of thought that just because they're so high, the prices have to come down. But that just because they're high, and I get like it's natural to think, oh, the price has to come down, it's not going to go on forever. Well, the data about homes and supply and demand right now, so there's not enough home builders in the country to catch up with the demand that we have.
We're
for
short
houses.
5 million homes.
Yes.
We're short 5 million homes.
The supply is not close to the demand. We don't have enough contractors that build homes to resolve this. So and reading this kind of highlighted to me, well, people think housing prices will start coming down, but my opinion, and I would argue that there's data that suggests that housing prices will continue to rise.
The thought that housing prices will come down, I don't know where people get this, because you're assuming someone's willing to take less for their house now.
Well, and I think it's just the prices have just kind of escalated quickly, and I think people are thinking maybe they're thinking back to 2007 and 8, but
well, no.
They're different situations. And
here's why. In 2007 and 8, they had to sell their house. They couldn't afford it. That's
Correct.
why housing prices came down. It wasn't because the house was too expensive. The mortgage that was given to the person wasn't appropriate. That caused housing prices to go down. Will it ebb and flow a little bit? Yeah, but I don't think you're going to see people. I look at what the price of these homes are, and the same house from a year is up like $100,000, like new construction. I'm just not sure the builder's going to take less than he has in the house. I don't think housing prices are going down until people can't afford the home.
I would agree with that.
And there's one thing that can lend to that. If interest rates go up 2% and all of a sudden you're at a 5% mortgage, that could cause that to happen, right? Because as interest rates go up, your cost to borrow goes up as well. But we've had this conversation. I was told from the time I bought my first house, interest rates will never be lower. Told this story. I've had like 8 mortgages. They just keep going lower. I was on the drive with my banker over the weekend. Interest rates, they're going up a little now, but are we more likely to go lower or higher over the next 15 years? Instincts tell us higher.
Yeah.
But realistically, if all of a sudden the interest rate goes to 5% on a mortgage and nobody decides to borrow at 5%, what happens to the housing economy?
Well, that would cause housing prices to come down. If no one's going to take out a loan at 5% to buy a house.
It's not just housing.
Yeah.
It's everything.
Right.
It's the subcontractor. It's the drywaller. It's the title company. It's the insurance company. It's the real estate agent. It's everything. If you think about what drives the American economy, it's some level. It's housing because everybody touches it. Everybody owns one. Everybody touches it. If you think about how many jobs one home employs, it's unbelievable. So the idea that interest rates are going to go to 5% on a mortgage rate, I just don't see that happening, even if there is inflation. Because now all of a sudden we're shutting down another sector of the economy. Because, for instance, I have a rate at 2.75. Well, if rates went to 5, I just wouldn't sell. Like, I'd just keep what I have.
Yeah, right. So
Only if I was forced to sell, which happened in 2007 and 8. People had a low interest rate. They had a teaser rate on an adjustable rate mortgage. And then, oh, by the way, now that adjusted up to 5 or 6%, and they couldn't afford the mortgage. They had to sell. I'm not sure the lending world is operating in that loose capacity today where they may have those issues.
Yeah, well, and they may be loosened up a little bit, but probably the one area you still have to show income to be able to get loans, where there was a time where you could get a loan with like the ninja loan, right? No job, no income, and you could borrow money.
Yeah.
Well, I think that's one area that has stayed away, right?
That doesn't exist, and here's why.
Yeah.
All these loans are sold on the secondary market. So your local bank goes and does a mortgage for you. They're selling it to somebody, and they're underwriting it. The last 2 years, I've had more calls from seniors about getting financial documentation so they can go take out a loan on a house. I mean, people with $1.5 million, $2 million, and the bank won't lend them a couple $100,000 to buy a house while they wait to sell their house here. I mean, it's like pulling teeth to get it done. So
Yeah.
I think the lending industry has changed. But with that said, if anybody out there wants help with a financial plan, you want a second opinion on what you're doing, or just have some questions, please reach out to us at btwellshow.com. We'd be happy to help you. Thank you for listening.